These are instructions for Chapter 13 Mastery Problem. You've been assigned to do the Chapter 13 random problem. I'm showing you the static problem. So this should be helpful because it should give you some questions that are relatable to the ones that you're seeing with the random. Our job for this one here is to take care of the payroll transactions for the month of January and February for this company, Keller Systems. Let's take a look at what we have to do. So the first thing we have to do is we have to journalize transactions. And then finally, we'll take a look at cash payment totals on the next tab. The instructions that we've been given are the list of transactions for January and February. We'll have our payroll tax rates. They're available here, and they're also available in our instructions. And then we also have our chart of accounts, which lists all the accounts that we have for this business, Keller Systems. I'm going to go back to the transactions, and I want you to take a look at the first few words for each of these transactions. It's either paid cash or it's record. Paid cash or record. Anytime you see paid cash, it should ring a bell in your mind that this is for your cash payments journal. And then we also have general journal. This is what we're going to do when it says record. So we'll record things in the general journal, and we will make payments in our cash payments journal. This is going to be for Keller Systems. We're going to be doing our payroll transactions for the 1st of January to the 15th of February. We have our tax rates down here. They're also available up here on this tab. No earnings have exceeded the tax base for calculated unemployment. So that means none of the employees have earned over $7,000. So we don't need to exclude them from not being taxed for federal and state. They are a monthly depositor for payroll taxes. And we're going to be journalizing these things on page 14 of the cash payments and the 13th of the general journal. The first thing we're going to do is for January 15th, we're going to pay cash for December's payroll tax liability. So it's telling us exactly how much was withheld, and we're going to make payments to the federal government for our tax liability in December. So we've got January 15th, and we are going to make the payments for the employee income tax payable. And then we have our Social Security tax payable. And then our Medicare tax payable. So when we make a payment to the federal government for the previous month's taxes, we are going to include our federal income tax, our Social Security, and our Medicare. The check number for that is going to be C20 or 621. And we're going to debit each of these amounts here, and then we're going to record a cash credit. So we're going to record all of the items that for the federal income tax or the employee income tax payable, Social Security, and our Medicare. We'll add these up, and that's how much we're going to write a check to the federal government for. So we have $790 for our employee income tax payable. We're going to have $1,557.44 for Social Security tax payable. And we're going to have $364.24 for our Medicare tax payable. Now we'll add those up and find out how much our check is going to be written for. 790 plus 1,557.44 plus $364.24. So we add these up, and we're going to write a check for that amount. And that amount is going to be $2,711.68. So this amount here is going to cover our federal income tax, our Social Security tax, and our Medicare tax for the month of December. We're writing it 2 weeks into the next month. Next thing we've got is we have to pay cash for our semi-monthly payroll. So from January 1st to January 15th, we have to make payments to our employees. So we're going to have the 15th here, and we're going to record our salary expense. And what is made up in our salary expense? In our salary expense on a bi-monthly basis, we're going to record our employee income tax payable, so our federal income tax. We're going to record our Social Security tax payable. We're going to record our Medicare tax payable. And because we also have health insurance here, we're going to include our medical insurance payable. So included in our semi-monthly payroll, we're going to include these four taxes here, or in this case, a withdrawal. So our salary expense is going to be, as it says here, $6,420. Now, where is that made up of? This is made up of our employee income tax payable, and it gives us that amount. It says right here, our employee income tax payable is going to be 410. So we'll record that here, and the credit, we will credit, I can't figure this one out just yet, and I can't figure this one out, but I do know our medical insurance payable. That is going to be 360. To come up with our Social Security tax payable and our Medicare tax payable, I'm going to multiply our salary expense by the rates for Social Security, which is 6.2, and the Medicare tax payable, which is the 1.45. So we'll take our salary expense, which is 6,420 times 0.062 for our Social Security, and that comes out to be $398.04. Now we have to figure out our Medicare. So we'll take our salary tax expense, 6,420 times 0.0145. And that comes out to be $93.09. So our taxes make up a small percentage of our salary tax expense. Now the remainder of that is going to be written over here, and that's going to be paid to our employees. We're going to pay our employees with that. So let's go ahead and identify how much we're going to pay our employees. So we'll take our salary tax expense, which is 6,420 minus 410 minus 398.04 minus 93.09 minus 360, and that comes out to be $5,158.87. That's what we're going to pay our employees with that amount, $5,158.87. So this is the money they earn from January 1st to January 15th. And these are the taxes that we're going to withhold right now. We're going to withhold these amounts. We're not paying this amount for be able to pay these on the next month in February 15th. Okay, so the next thing we've got here is our record employer payroll taxes expenses for January 15th payroll. So our payroll right here, we need to record that we're withholding these amounts down in our general ledger. So let's record that. So down below, we're going to record January 15th, and we're going to have our employee income tax payable, our Social Security, and we're going to record our Medicare tax payable. Okay, oops. Get that right here. Oh, I'm sorry, I made a mistake there. I'll fix that. So we have our payroll tax expenses. Payroll tax expenses. Taxes. There it is. And then we're going to record our Social Security tax payable. And we've got our Medicare tax payable. I could have left that there. Medicare tax payable. And then we're going to have our unemployment tax payable for federal. And we're going to have our unemployment tax payable for state. All right. So the memorandum for this one is going to be, let's see here, it's M64. Great. So we'll record our Social Security tax payable, Medicare, and then we'll have to figure out our unemployment. So I'm going to pull these numbers from up above. So we've got 398.04 and 93.09. So 398.04, and our Medicare is going to be 93.09. And again, we figured that out up on the cash payments when we were withholding that. Now we need to figure out our unemployment tax payable for federal and unemployment tax payable for state. So what I'm going to do is I'll take our salary tax expense, $6,420, and we'll multiply it times that rate. And we have those rates here. Our federal is going to be 8.8%, and our state is going to be 5.4. So for federal, 0.008 equals $51.36. And then we have to figure out our state. So we take our $6,420, our salary expense, times 0.054. It's our state rate. And that's going to be $346.68. So to figure out what our payroll tax expenses are going to be for the January 15th, we're going to add all of these up. So I'll take this unemployment for state plus our unemployment for federal plus our Medicare tax expense and plus our Social Security, which is $398.04. And that comes out to be $889.17. So this is the money we are withholding, and we're going to pay the following month. So we're just recording it right now. Okay, so the next thing we've got is we need to pay cash for employees' health insurance premiums, $720. So we'll go here back to our cash payments journal, and we're going to make a payment for our medical insurance payable. So on the 15th, medical insurance payable, and this is going to be check 623, and we're going to make this is, again, we owe this $720, and we're going to pay this. So we're going to debit our medical insurance payable, and we're going to cash credit our $720 so that we pay that amount. All right. So that takes care of the last transaction for the 15th. The next thing we have to do is we have to pay cash for our semi-monthly payroll on the 31st. So this is going to look a lot like this transaction right here. I'd love to highlight this here for you, but on this one here, pay cash for semi-monthly payroll, total earnings $6,420. This transaction is going to look a lot like this one here. This is our payroll for the 16th of January all the way to the 31st. So here's our gross wages, the $6,820. And this time, the first part of the month was $6,420. So it just looks like our employees made just a little bit more at the end of the month here. So let's record that. So we have the 31st, and we're going to record the same things. Salary expense, record. So what's happening here is, again, we're making payments to our employees, and we're going to record our taxes that we're going to withhold, again, just exactly the same way that we did it up here. So this check is going to be $663, and then our gross earnings are going to be, as it states up above, gross earnings are $6,810. So we'll go ahead and start recording these here. So we got our income tax payable. It tells us this much amount is $445 here. We're going to withhold this. It's going to be the same amount, $360 down below for this end of the month. So we figured out, we know what our federal income tax or our employee income tax payable is going to be. We know our medical insurance payable. Well, we have to just figure out our Social Security and our Medicare. So again, what we'll do is we'll take our salary expense, $6,810 times 0.062 for our Social Security. And that gives us $422.22. We'll have to figure out our Medicare tax payable. So that's going to be $6,810 times 0.0145, which gives us $98.75 because we're going to round that up. $98.75. Great. Now, as you know, this is going to be our withholdings. We have to figure out how much we're going to write our check for. So we have to take our salary expense minus all our withholdings and then pay the check to our salary expense. So we'll take that. We'll take $6,810 minus $445 minus $422.22 minus $98.75 minus $360, and that comes out to be $5,484.03. So we're going to write a check to our employees for $5,484.03. And again, that's the money that they've earned from January 16th to January 31st. Great. So we took care of the paid cash semi-monthly payroll. And as you know, anytime that we make a payment for our semi-monthly payroll, we have to also record our employee payroll taxes for that pay period, that 2-week period. So we're going to go down to our general journal and we're going to record that. So we're going to have the 31st here, and we're going to have the same things we're going to list here. Payroll, tax, expense. Oops. Did the same thing. Payroll, taxes, expense. Then we're going to go ahead and have our Social Security, tax payable. We're going to have our Medicare, tax payable, our unemployment, tax payable for federal. And we're going to have our unemployment, tax payable for state. And our memorandum for this is going to be M65, or Memorandum 65. So we don't know this just quite yet, but we do know our Social Security tax payable is going to be right here, 422.22. 422.22. We know our Medicare tax payable is 98.75. But we have to figure out what our unemployment federal is and our unemployment state is. So we'll take our salary expense. So we've got $6,810 times our rate for federal, which is going to be 0.008, and that gives us $54.48. Then we're going to find it for our state. So we'll take our gross, 6,810 times our state rate, which is 0.054, and that comes out to be $367.74. $367.74. Great. Now to figure out what our payroll tax expenses are for this pay period, the 16th to the 31st, we're going to add those up. So $364.74 plus 54.48 plus 98.75 plus 422.22. And that gives us $943.19. So just to summarize this here, we've paid our employees twice for the month of January, on the 15th and the 31st. And this is the total amount of taxes that we've withheld for the 1st to the 15th, and then also the 16th to the 31st. So if we were to add these two up, this is what our payroll taxes would be for the month of January. We're going to do this here for January in February, just like we did here on January 15th. We're going to add up both of our federal income tax, our employee income tax payables, add up both of our Social Security, and add up both of our medicals. This is for the month of December. We're going to figure it out for our month of January here very soon. Okay, so we've done recorded employee payroll taxes for the January 31st. Next thing we have to do is we have to pay cash for our tax liability at the end of December and pay taxes to our state liability at the end of this quarter. So we're going to come back up to our cash payments journal and we're going to make payments to those. Okay, so let's do that. So on the 31st, we have 2/31 here. This is going to be for our unemployment tax payable federal, and this is for our unemployment tax payable for state. And the check numbers on both of those are going to be 662 and 663. I noticed right up here I made a mistake on this one. It should be 661. I'm writing that out right now. Okay. So 662, 63, great. So now what we have to do is we have to take care of and pay that amount. So what we're going to do is we are going to take our unemployment tax payable federal, which is, it says it right up here, is going to be $43.20, and our state one is going to be $291.60. So let's write those out. So it's going to be for $43.20, and this one is going to be for $291.60. Great, it gives us those amounts. Then what we'll do is we'll write a check for both of those there. So it's going to be $43.20, and this is $291.60. Great. So that takes care of us paying off our tax liability for that month. All right. So next thing is we are jumping into February now. So we're getting into February. So we have to pay our cash for the January liability for our employee income tax, our Social Security tax, and our Medicare tax. So let's start figuring that out. So we're going to start on line 17. This is going to be February 15th. And then we're going to go ahead and record January's. We've already done December's. Now we're going to do January's. So we're going to do employee income tax payable. Social Security tax payable. And we've got our Medicare tax payable. Okay. And the check number for this one is going to be, so I don't mess that up, 687. Okay, great. So now what we need to do is we are going to identify what our employee income tax payable is. So what we'll do is we're going to take 410 plus 445. We're going to add those two together. So let's do that. And again, I'm taking it from my employee income tax payable for the 1st of the 15th of January. And we're going to take our employee income tax payable for the 16th of the 31st. So I'm going to add 410 plus 445, and that's going to give me my tax liability for the month of December. Okay, so we'll take 410 plus 445 equals 855. So 855 here for our employee income tax payable. All right. Next, we have to do our Social Security tax payable. So what we're going to do is I'll come up here to our 1st of the 15th, which is 398.04 plus our 422.22, and that gives me $820.26. Now, as you know, when we're doing our employee and employer tax liability, we're paying this, we have to double our Social Security and we have to double our Medicare. That's something we did in 13.4. So what I have to do is I have to add up our two Social Securities, and I'm going to multiply it times 2, because that's going to cover both our employee and our employer. So now it comes up with $1,640.52. And I'm going to do the same thing for the Medicare. So our Medicare was $93. plus this one here. The second part of the month was $98.75. And that equals 191.84. That covers our employees. I'm going to multiply times 2, so it includes our employees and employer. So 383.68 is going to be our Medicare tax payable. So what I'm going to do now is I'm going to write one check to cover all of us. So that's going to be our Medicare plus our Social Security, which is $1,640.52 plus $855. And that comes out to be $2,879.20. So $2,879.20. So I'm writing a check to the federal government to cover our employee income tax payable, Social Security tax payable, and our Medicare tax payable for the month of January. And we were able to pull those numbers from withholding it on the 15th, from the 1st to the 15th, and withholding it on the 31st, from the 16th to the 31st. I was able to pull that information from these numbers right here. Okay, we're almost done here. So the last two things we have to do is pay our employees and figure out our withholdings for February 1st through February 15th. So let's go down and make those payments. So this is going to look exactly like on line 4 through line 8 and lines 10 through lines 14. So we have the 15th here, and we've got our salary expense. Then we're going to have our employee income tax. Okay. So again, if you're keeping track here, we're doing the same thing. We're paying our semi-monthly payroll because we pay our employees twice a month. So the check number for this one is going to be 688, and our salary expense for this month is going to be 6,280. Okay. Now what our withholding is going to be for our employee income tax payable. So this is going to be 398, and our health insurance premiums are still 360. So 398, 360, and now we just need to figure out our Social Security and our Medicare. So we'll take our salary expense, our gross pay, 6,280 times our Social Security rate, which is 0.062, and that comes out to be $389.36. And then we have our Medicare tax payable. So we'll take our gross pay, 6,280 times that rate, which is 0.0145, and that comes out to be $91.06. So this is how much money we're going to withhold from our salary expense. Now let's figure out how much money we're going to pay our employees. So we'll take the amounts, our gross pay, 6,280, minus our employee income tax payable, 398, minus our Social Security tax payable, 389.36, minus our Medicare, which is 91.06, minus 360, and that comes out to be $5,041.58. So we're going to be paying our employees for this pay period, this 2-week pay period, $5,041.58. Okay. And as you know, anytime that we pay our employees for that semi-monthly pay period, we also have to record how much we're going to withhold for employees for that month as well. So we've got February 15th, and what are our payroll taxes expense for the 1st to the 15th? Social Security tax payable. Okay, so we're able to pull this information for Social Security and Medicare because we did that above, and that's going to be 389.06. Our Medicare tax is going to be $91.06, but now we need to find the federal and the state. So we'll take that gross pay, which is 6,280 times the federal rate, which is 0.008 for 0.8%. And that gives us $50.24. And then what we'll do is we will take our gross pay again to find our state, 6,280 times our state unemployment, which is 0.054. And that gives us $339.12. So we're going to add all these together to find out what our payroll tax expenses are going to be from February 1st to February 15th. All right, so 339.12 plus 50.24 plus 91.06 plus 389.06. So our payroll tax expense for the 1st to the 15th of February is going to be $869.78. This covers the transactions for January 15th through February 15th. This is part one. I'm gonna stop recording now, and I'll record part two for the cash payments journal totals.